Hi, Kevin Brierton here, Neo Home Loans, Certified Mortgage Planning Specialist, here to talk about three things today. We're going to talk about why you do not need 20% down, but more importantly, what you can do with the money outside of putting the money down in the house. I think you guys will really like it. We'll also give you a quick market update, and then we're going to talk about what's going on in the industry, a lot of layoffs. So we'll jump right into it and go over the information. I'm going to share my screen on a recent mortgage plan that I set up for a client of ours. This was really cool because what I've done here is I've broken down in our total cost analysis, I've broken down three different options, and we even added an extra fourth option. So the client came to me over a period of time. We've been working together, and the goal was to put low down, get him to a house, and then start building possible rental houses. So get his first house, which is a great way to start building your rental properties, and then buy other properties. But low down was important so you can leave money on the table for future houses in 2-3 years down the road. But the concern was, well, my payment's higher, or do I get a better deal by putting more money down? In this case, the client was using money from a retirement account. So the key here is we were comparing numbers and saying, okay, well, if you take the money out of a retirement account, what happens? Is it better to put the money down, or is it better to put lower down and leave the money in a retirement account? So with our software, this is really cool because what I was able to show them was the breakdown of the net worth over 15 years. So what I broke down was taking the difference of the $200,000 in retirement, letting that grow, or taking it and putting down on the house. Okay. So what we found was the 3% down over 15 years, you'll actually have a higher net worth than he would if you put 20% down with a lower interest rate. Okay. So this is important to know because most people think, well, I need to put more money down and it's going to be better because I'll save an interest. Well, why are you trying to save an interest? Because you're trying to increase your net worth or build your assets. But if it's working against you because you're taking money somewhere, first off, might have a tax hit. I'm not a CPA, but a lot of retirement accounts, if you draw it out, you'll get a tax hit or some sort of penalty, possibly as well. I did not factor this into that. So that's just above and beyond. It makes the numbers even support more of putting lower down in this case. So here's the difference though. I mean, you're almost talking $100,000 difference between 3% and 20% down in net worth. Remember, you're keeping the asset growing. With the market, I believe I used a very nominal or very low rate of 6% rate of return for the investments. And so this breaks everything down. But here's the nice thing. I did not reinvest the money. So let's say he reinvested, the money still, let's over 15 years, that he would have to reinvest every single penny to still be at exactly where he would be at on the option one of 3% down. And you and I both know, I've been doing this long enough, if people save $500, that money's going to be gone. It's probably not going to be reinvested. So by doing 3% down and forcing to keep that money invested in the stock market in the retirement account, that money is then earmarked for future use, retirement, and going to help him better in that case. So I just thought it was very cool because, the reality is I want to look at all the numbers. If a client asks us to, break it down for them, I don't want to just give them the quick answer. I want to give them the right answer and really break down the numbers and go, okay, well, let's look at it. Let's put it in the software. Let's break down the numbers and see what it actually comes out to. And there's a bunch of different ways we can use this software. We just love that. I want to give you a quick market update. Market update for mortgage-backed securities have been moving around. So a couple good things is inflation has been kind of getting a little bit better. You probably see it at the pumps. Gas prices are down significantly. They're down another 17% in the recent weeks. I just saw $3.99 for gas, which is awesome. So, but what we're seeing is inflation kind of coming down a little bit, which then that is actually helping interest rates start inching down. So be aware of this. So if you get a pre-qualification at one rate, it might be different the next day, or it might be higher or lower the next day. So just kind of keep that in mind. Work with your mortgage professional. A lot of times there's renegotiation options if you need to make sure you find the right balance of risk and reward based on what rate you're trying to get to and what payments you're trying to get to. So just be open with your loan officer, work with them. And then right now, mortgage companies are exiting the industry more than ever. We've just got news that a large mortgage bank got out of what's called the wholesale market. Wholesale market is what brokers go to get their loans. We can broker. We're an independent mortgage lender at Neo Home Loans, but we are backed by a mortgage bank. So we underwrite, approve, and fund our own loans. So we control a lot of that process and the funding process, which is very important. Then we can broker, I believe, up to close to 80 to 100 different places as well. We have a lot of different options if we need to broker. So we kind of have the best of both worlds. But the concern here is if wholesale channels keep backing out, what happens is if those brokers are specifically going to those wholesale channels, brokers typically will they'll pick a handful of loan lenders to go with. They'll usually pick maybe 3 to 8 lenders to go to. They say they're necessarily shopping the market. We shop the market too because we have investors that we go to, but we actually fund our own loans, which is awesome because we control that process. So let's say somebody gets near the end of the process, we're going to closing. If that wholesale lender and I was a broker pulled out, we couldn't fund the loan. So in our case, we flip it over, we fund it in our name, and then we flip it over to a different investor. God forbid the investor pulls out at the last minute. This is an important thing to know because it is happening. If you or friends or family have any questions or concerns about your mortgage plan, if you're currently pre-qualified, we're happy to take a second look at it. We could run that analysis and actually compare side by side what you're getting quoted to what we can do as well. Give us a call. We'd love to help. We're honored to help. And also, if you found this valuable, please like, share, or comment below. And we're here for you. So best number to reach out to is 480-553-8770. If you have any questions, let us know. Have an awesome week. And thank you so much for watching. Take care. Bye.